Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Chris Vermeulen from thetechnicaltraders.com. Welcome back to the show, Chris.
Hey, thanks for having me, Jim.
Chris, do the oil companies have something to smile about?
Yeah, they do. You know, they've been on fire the last month and change, while the overall stock market has been struggling. They've been pushing to new highs, multi-month highs. You look at the OIH, oil holders sector, or XOP, which is the oil and gas exploration stocks. They've all had some pretty decent runs in the last month and a half, up, 30, 45%, those sectors. So they're definitely smiling. But, we're starting to see a little bit of rotation out of that sector in the last 3 or 4 trading sessions here. And we've been seeing money start to trickle back into what the old leaders were, which was technology, biotech, the solar and clean energy. We're seeing a little bit of a wave of money flow back into those leaders from last year. And so it's going to be interesting to see how this market plays out over the next week or so. We're at this really big turning point where there isn't really clear direction where the stock market wants to go. Yes, it's been trying to go higher. The Dow and the Russell 2000 have been breaking to new highs. The S&P 500 is flirting with all-time highs. But the NASDAQ is still way off the highs, and it was a big driver of the market over the last year. So the fact that it's still not in an uptrend yet and it's struggling, and some of the big sectors in that index continue to still be in downtrends, we got this real kind of mixed market where, yes, some stocks are doing very well, other stocks are still underperforming dramatically. And so we're at this turning point. We just need to see which group of stocks are really going to be the leaders going forward. Is it going to be the oil energy sectors, which have been doing well over the last month and a half? Are they going to continue to hold that, or was that just a wave of kind of money kind of flip-flopping from one sector to another, and now it's about to start going back into the leaders that we saw last year, like clean energy and solar and things like that?
Was it surprising or interesting that you said the market's been doing a good job of rotating over, I would say, the last 6 months, where high tech was the hot thing, and then it was biotech, then it was energy. What do you think is going to be the next thing that it rolls over to?
Yeah, well, right now the leaders that have been really showing all the strength continue to still be the alternative, like the marijuana sector, still doing very well. But really, it is the oil kind of energy stocks. Retail sector has been doing exceptionally well, but it's a little convoluted, the retail sector, simply because we've got AMC and we got GME, and they're posting big gains and big movements, so it really shifts that sector around. I think there's a lot of potential still in the energy sector stocks, like the oil sector. I think there's a lot to potential in the banking sector. In the financial sector, we're seeing, interest rates kind of creep up. That is kind of good for the banks, the financial system. And so those ones are really starting to work themselves up the ranks and perform very well. We're seeing strong patterns. They're in a long-term and a short-term uptrend. Money's flowing into them with increased volume. So those to me are the ones that are leading right now. And the big question is, are they going to continue to lead? Which my gut is saying they will. I think this market's going to have a little bit of a hiccup, the stock market in general, for potentially a week or two. But then I think after that, we're going to see these new stocks, the energy, banking, financials, even the real estate sectors doing well. So I think there's a big shift from tech and biotech over to, energy and banking. So very different kind of side of the market is going to be hot.
It's a year from what they call Black Monday when the market had its super big correction. Are we going to have another one this March?
I don't think we're going to have another one this March. I mean, I don't see anything really creeping up behind the scenes that's going to spook the market to that effect. But you never know. You never know what's going to happen. There's always some chance of what's going to happen in the stock market, something big. But I do feel like the market, there's not a lot of liquidity in this market. I mean, liquidity has been fading for years in the stock market. When sellers come out, the market just collapses in free falls. There's just not, the big steady stream of buyers, investors willing to pile in. People now are much more short term. When something starts to fall, everybody steps back. They don't want to put their bid out to buy it and catch that falling knife. So when the market does start to sell off, we do see pretty quick drops, 4, 8, 10% very quickly in the last year and change. So, it's a choppy market, but I don't see a big crash or collapse really anywhere on the horizon yet.
We'll have more with Chris Vermeulen right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Welcome back. We're speaking with Chris Vermeulen. Chris, with record margin debt, is there any fear in the market yet?
There still is very little fear in this market. I mean, you look at some of the kind of the things behind the scenes, what the VIX is doing. The VIX is breaking down to, I don't even know if it's almost a year low almost, which is telling us that we haven't seen, people are not fearful right now. Fear continues to fall. People are expecting this market to go higher. And you can also see that again with the put-call ratio. People are buying records amount of leverage to the upside. They're not just fearful, they're expecting this market to go higher. So that is a really scary sign. And you can also see it because no one wants to buy bonds. Bonds continue to be, treasury bonds, in a free fall mode. I still think there's more downside to the bonds, another 4 or 5%. And that's a sign, again, that there's not a lot of fear. Typically when fear creeps into the market, the VIX will hold up. We'll see bonds start to move higher. And also, we've got this unique situation in the utility sector. Utility sector, I wouldn't say is a safe haven, but it is a defensive play that we tend to see smart money kind of rotate into when it gets nervous about the stock market having a pullback. We've seen this happen 4 or 5 times in the last year and a half where the XLU, which is the utility sector ETF, it rallies 8 to 15%, outperforms the stock market dramatically, and then we see the stock market put in a top and sell off for a couple of weeks. Well, we've just seen that same thing, or we're seeing that right now. The utilities index is up about 9% in just the last couple of weeks, outperforming the stock market dramatically. It looks like we're primed and ready for some profit taking, a wave of selling in the stock market, which will be a nice little reset. And then after that, several weeks from now, we'll get a vibe on which sectors are leading or breaking out first. Where is the money flowing? Is it going to be banks and real estate and energy, or is it going to be back into technology and the solar, clean energy sectors, those type of plays? So I'm just kind of waiting for this market to recalibrate, cleanse itself. Ideally, we see a bout of selling that kind of cleanses the air and gets us primed and ready to see where the fresh batch of money is going to hit the market where.
A survey found that about half of American millennials plan to use their stimulus check to spend in the stock market. Is that good news for the stock market?
I think it's going to continue to drive the markets higher. I mean, we saw a huge flow of money last year with stimulus plans, people opening trading accounts and trying to trade from home to make a living. The reality is, trading's really tough. About 95% of traders, short-term traders, will end up losing money. They never make money or they blow their account up. So it's really tough if you don't have a proven strategy, and really you need multiple trading strategies. So I do think the stimulus is helping push this market up. But as you know, I think when there's good news and everybody's feeling good and stimulus hits, you think all that money is going to flow into the stock market, which a lot of people are probably dumping it in. It's usually actually a bad time to buy into the stock market, and then we see some type of selling. So I think all this is painting a picture that, hey, things look bright, stock market is the place to be, dump in your free money and see if you can make some gains. To me, that's like a big red flag, a beacon that, hey, we're going to see a pullback, and after that pullback, we should be primed and ready. But I think a lot of people are just throwing money at this market like a dart. And, it works if you hold on to it long enough, long term. Short term, though, most people end up getting shaken out and they can't handle the losses or their account can't. So it's going to be a tough go if we do get a market correction here over the next week or two.
We'll have more with Chris Vermeulen right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Chris Vermeulen. Chris, the U.S. Fed says it's going to fight like hell to keep interest rates down, but can they really if there's international pressure, say, in the long-term bond market, which finances mortgages?
Yeah, I'm not really sure what's going to happen there, to be honest. When fear hits the market and people demand higher rates if they want to take bonds, I mean, you can see the yield curve start to spike and move up. It's going to be interesting if they can hold back, the pressure from the masses. So I'm not sure how that's going to play out, but there is some fear creeping into this market, and people do not want to own long-term debt simply because they feel like risk is a lot higher than it should be for the rate that it's paying. So, I think in the States we saw mortgage rates jump over 3% a few weeks ago. So rates are starting to jump up, and it's going to slow the markets down to some extent. If people can get better rates, they might not want to take risk in the stock market. If rates go up, for mortgages specifically, it's going to be harder for people to get financing, especially with more people making less money. With the whole COVID shutdowns and slowdowns and things like that, real estate market could become a little bit choppy. So there's a lot of interesting things going on. There always is, but you really got to sit back and just focus on the longer term trends and stick with those. So when it comes to rates, I don't follow them too closely because I follow the price of the markets. But it'll be interesting to see if they can keep rates down. I have a feeling it could be difficult if the market continues to see this elevated fear just keep building and building. Because I think a lot of people are starting to catch on that, the stock market is propped up. This is a big bubble, and if and when it does burst, it could get very ugly. So people want they're wanting higher rates, more protection. People are getting a little nervous, but they're definitely not buying any downside protection. They're thinking about it, but there is no downside protection yet. They're just still full out, put me in the stock market, let's ride this, for all it's worth.
The Canadian dollar has stayed around 80 cents for some time. Is that a surprise?
The dollar's been holding up pretty well. I think the dollar still wants to actually go a little bit higher. I think what we're going to see is a little bit of, I think we're going to see some selling in the stock market. It's going to put a little bit of fear into the market, and I think the dollar will continue to move up going forward. You look at the Canadian dollar, it's been on fire the last week and a half, moving up, continues to do really well with crude oil holding its ground. But the U.S. dollar, when you look at the long term, it's got some mixed signals. It's at a long-term support level down from 2018, and I think it's got room for still a pretty strong bounce to rally for several months, if not a year or so. And I think we could see the dollar rally if the stock market does put in some major topping phase and start to lose its upward momentum, because we tend to see money rotate to the dollar when it gets nervous. But at this point, the dollar is in a downtrend. It's at resistance. I think it could sell off a little bit, but longer term, I still think it's actually going to hold its ground. It's actually going to move up over the next year.
Is Bitcoin starting to look wobbly?
Well, Bitcoin's had a really nice run. It's doing something similar to what it did really only about a month or so ago, where it broke to a new high, and then it takes a little pause and a pullback. It did that in early February, or mid-February actually, and then it kept on going higher. And I still have a pretty good upside target for Bitcoin. I still think we could see Bitcoin run all the way up to around $73,000. Now, in the last 2.5 weeks, it's rallied up, hit new highs, and it actually hit a Fibonacci extension of 618, which is a measured move where typically if an asset or an equity or a currency runs up and hits this momentum level and then pulls back, it almost always goes up and hits a 100% measured move. So this 618 was at around $62,000. Bitcoin hit that, and now it's pulling back for 2 days. So I do think we could see Bitcoin run another $10,000 from where it is all the way up to 73,000. And that'll be the next kind of major topping level where I think it could consolidate for a month or so after that. We've seen this happen twice already. This would be the third wave. And with my analysis, I call it 3 surges to a high. The third surge sometimes, in a lot of cases, depending on how it pulls back, can be a very big tell to tell us if the market has put in a major top or not. So I'm going to be very excited to see if and how it gets to 73,000 and reacts right after that level.
Chris, thank you so much for chatting with us.
Hey, thanks for having me on the show, Jim.
My guest has been Chris Vermeulen from thetechnicaltraders.com. And for all the HowStreet.com listeners, we have a special treat. Friday, March 19th, I'll be hosting a webinar with Rick Ackerman, editor of the newsletter Rick's Picks. And Rick has a particular point of view that a lot of people don't think is going to happen. So many economists are predicting that we're going to be facing hyperinflation. Rick, you have a different point of view. Why do you think deflation is going to be the big problem we face in the future?
Well, first, thanks for helping me to put this together, Jim. I do think that the end game will feature deflation. We've got such an acute mania going on in all investables right now that even the bulls must be forced to see that it's not going to end well. So as far as I'm concerned, the bad ending is going to be deflation rather than inflation. And although that sounds counterintuitive because of all the credit stimulus that's going on, I think in the end it's debtors that are going to get stuck, not lenders. And that implies in deflation, it implies a strong dollar, a crushing burden of real debt. It implies that we're never really going to get out of our mortgages by being able to pay our lenders in $100,000 bill snide. So that's where I think things are going, and I'm in a very small minority with that scenario.
And Rick, what's the website they should go to?
Yeah, that's rickackerman.com. If you go to rickspicks.com, you're going to find a New York-based pickle and relish vendor. So rickackerman.com is where you want to go. You can sign up for 2 free weeks of everything I offer, including a couple of great trading rooms for just $1. So that's just click Start Trial at the top of the page, rickackerman.com.
So join us Friday, March 19th for a webinar with Rick Ackerman about deflation. It starts at 10 o'clock Pacific, 1 o'clock Eastern Time. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.